Hey, gang, this is Carl White, and you are listening to Author Showcase, sponsored by the Scotsman's Guide. And on here, we interview the authors of the articles on the most recent subscription of the Scotsman's Guide. And on this one, there's two different divisions. There's a commercial division, and then there's a residential division. And today we're interviewing Dottie Sheppick, who wrote a great article in the residential side called Carousel of Promise. So, Dottie, first of all, great to see you here, and thanks for being our guest today.
Okay, well, thank you, Carl. I'm glad to be here.
All right, perfect. So Carousel of Promise. Give us a 30,000-foot view of what exactly this article was about, first of all.
Yeah, so Carousel of Promise, I wasn't the one who chose that name, but I did promise to provide some background on the state housing finance agencies in our country. So that's what it's about. It's sort of a well-known secret that the state HFAs, not FHA, HFAs, housing finance agencies, provide financing for single-family home ownership. They do a lot of other great things too for their communities, but the single-family home ownership programs are what I've been mostly involved in for over 30 years. And I know loan officers have often heard about it or thought about it, but really not understanding exactly what HFAs offer, or maybe being a little bit afraid to dip their toe into it. So I wanted to provide some background on who the state HFAs are and what they provide.
So for the loan officers, what are the opportunities that the HFAs present to the mortgage loan officer today? Like, why would a loan officer go spend their time learning more about this, and how does it benefit them?
Well, I will tell you what I've seen most success is when a loan officer is partnered with maybe a great realtor or two who are willing to go a little extra mile to get more clients qualified. With a housing finance agency program, they will offer many benefits to the consumer, such as it could be a lower interest rate. I looked at one today that was offering 6 and 5/8 on a 30-year fixed rate loan, and that was on an FHA loan. And so in today's market, that's a great interest rate. In addition to that, down payment assistance is most often provided through state housing finance agencies. I think of the state agencies last year, about 77% of them had down payment assistance available too. And it's kind of interesting. I noticed in the February issue of Scotsman Guide that there was an article about down payment assistance. So I think it's in this market where loan officers, lenders are looking for every loan product available to put on their menu. I think down payment assistance is gaining a lot of interest. So for the lender, there are other benefits. So for the loan officer, definitely to the consumer, but for the lender, there are benefits as well, such as we know that HFA loans often provide or perform better in the long run than standard production. And we think there's a lot of reasons for that. Housing finance agency loan is often looked at by the consumer as a trusted advisor. So if they get in trouble, they might call the HFA, where they wouldn't call Joe Schmo National huge lender or bank. And often as well, these borrowers are required to go through some type of homebuyer education before the loan closes. So they have a little bit more information and understand why they need to call the lender if they get in trouble. And then finally, for the cap mark guys, what they love is the down payment assistance also provides a little bit of stickiness to the loan. So they might have a slower prepayment speed. So lots of stuff there from consumer all the way up to the top of the lender shop.
What about the challenges? So
The challenges.
what are some of the challenges that the HFAs, right? Boy, how many times a day do you correct people on that, right? FHA, HFAs. So, what are the challenges as you see that the HFAs present to mortgage loan officers? We see the opportunities. What's the challenges?
So just so you know, in the acronym world, I make that mistake occasionally too. But there are challenges. The housing finance agencies may run their own business. And what I mean by that is they may act as a mortgage banker, just like any other lender, and they'll buy the loans through their own process. But then there are others who have hired a lender or what they call a master servicer to manage their program for them. So in the mortgage banking world, the HFAs are essentially a conduit. They're the correspondent, where the lender will sell whole loans, and then the loans are packaged into mortgage-backed securities. So because of that, either the HFA themselves or the master servicers managing the program for them will ask the originating lender to complete a lender approval package. And that lender approval package may look a lot like it would be when you went to get your Fannie Mae, Freddie Mac, or Ginnie Mae approval. You'll have to provide them to a lot of information about your company, about your production, about your process, about your legal challenges or anything that exists within the company. So you have to go through that process. You'll have to pay a pretty small application fee. But once you've done that, then you may be one of the number one choices for first-time home buyers, for example, and for all the nonprofits in the area that are providing homebuyer education or helping buyers get to the point where they can save enough money and get a down payment provided and qualify for the loan, get their credit fixed. So so there's a lot of advantages. The other thing, Carl, that's stumped a lot of lenders is there could be additional paperwork as part of the processing of the loan. If you're dealing with a housing finance agency, for example, that's offering a tax-exempt bond program, the consumer will enjoy that lower interest rate as a result of that, but they will also have to sign additional documents. So, so in a way, the HFAs have gotten a bad rap, like it's really that difficult. But if you're a lender who's willing to put in the time, the technology, the training, you can get yourself a constant source of referral. A lot of times the HFAs will post, they'll always post their lender list on their website, but sometimes they'll post their best loan officers as well. So there's a lot of challenges, but there's a lot of advantages that go along with that.
How have the large banks' participation in the HFA programs changed over time?
Yeah, so especially this is old news too. I know a lot of the newer loan officers, but especially during the credit crisis, banks just did not want to provide that type of support. Again, it's going to take some enhancements to your technology. It's going to take some enhancements to your loan processing. So they began to back off of HFA loans years ago, which, by the way, just like a lot of other products, if a bank decides not to participate in a certain segment of the industry, those independent mortgage bankers are more than willing to pick it up. So independent mortgage bankers are still primarily the lenders that offer HFA products.
Do you think the HFAs will have any significant impact on the housing market, say, going forward in the next 5, 10 years?
I really do. And I'll tell you, there's several reasons why. First of all, many may not realize that we're not talking about a small number of loans. I think in 2022, 2023, the HFAs provided about $30 billion in single family financing. So that's a significant opportunity. And that will continue. And I think it may continue to grow. I think 23 production was about 11% over 22 production. We're going to still see that kind of growth, especially in this interest rate market. Again, one of the benefits that the HFAs have that independent mortgage bankers and bankers don't have, they can issue tax exempt bonds. And that tax exempt advantage to the investor is consumer, meaning turn on their investment. And that lower return.
All right, you cut out for about the last 20 seconds or so,
Did I?
Dottie.
Oh,
Yeah, that's okay.
okay.
All right, but I think I think they got the gist of it, and with the editing, they can put that back together. Um, what do you think is the best way for loan officers to communicate the benefits of the HFA programs to potential clients? Is this something that typically the client calls a loan officer saying, "Hey, I want this program," or is this something typically that the loan officer sees the opportunity and they're the one that introduces it to the prospective borrower? Which comes first, the chicken or the egg?
Yeah, I've seen both be successful. I've definitely seen loan officers who decided, look at, I'm going to make this my expertise. And that way I can advertise it. I can say, ask me about 6 and 5/8% 30-year fixed rate loans.
Mm-hmm.
And that's a great tagline, right? That gets people to call you. And whether or not the borrower winds up with the HFA loan doesn't matter, right? If they don't need it, they really shouldn't get it. They should go ahead with the standard loan production. But but there are also times when a consumer will see it and they'll ask the loan officer about it. So isn't it great for the loan officer to be able to answer their question rather than say, I
Mm-hmm.
really don't know? And you know that consumer is going to go ask somebody else.
Mm-hmm.
A loan officer, I would say any loan officer should be on the internet looking at their state housing finance agency, looking at the programs they offer, even if they haven't done a loan, or maybe if they don't even want to do a loan, they'll want to go at least understand what the state HFA offers and maybe attend one of their training classes so they can answer those questions from consumers. I'll tell you a really great story. One time when I worked for a large national lender and ran all of their affordable housing programs, and a loan officer and his team had just joined our company. And he called me and he said, Hey, Dottie, where do I find all the information on affordable housing? So I showed him, what we had available. And I said, Well, let me ask you. I said, How much production do you do in these programs? And he said, Well, Dottie, he goes, I really don't do a lot of production, but I sure start a lot of conversations.
Mm-hmm.
So for a loan officer, that's the kind of advantage that it might give you.
What and you might have answered that here in that last answer, but how does a loan officer keep up with the different programs and the changes to the different programs? And do they is this a pretty fluid platform where they're adjusting as needed, or is it, once they set is there a lot to learn each time, I guess is what I'm getting at.
There's not a lot to learn each time. There's a lot to learn when you start off. That's why you'll need to attend the training class. But one of the great things is that the HFAs will send out bulletins. They have guides available on their websites. Again, they'll do training. They have people who will answer the phone. It's a lot easier to get a hold of somebody at HFA than it might be to get a hold of the senior underwriter at the broker shop or at the lending institution where you might do retail. So there's definitely easy ways, even though it might seem daunting at first, there are easy ways to keep up with the programs. The other thing is, as opposed to somebody like myself that really has a view on what's going on nationally, a loan officer needs to know their state program, maybe a down payment assistance program available through their county or a local nonprofit. So they're going to create that click of relationships that is really going to work well for them. They don't need to know, they don't need to boil the ocean, just know those few people or those few entities within their own local area.
I like that. And you said watch the training class. What training class are you referring to?
All of the housing finance agencies offer their own training.
Got
Yeah.
it.
So yeah, go onto their website and see what the training schedule is.
Got it. And I know Dottie, you work over at, you're one of the founding partners over at Specialty Mortgage Product Solutions. What exactly is that? What do you guys do?
Yeah. So that's, the funny thing is my husband still doesn't know, so it's okay. We've been doing this about 8 years. After I left mortgage banking through national companies, I started this consulting company, and it's really a business to business strategy. So my clients have concluded Freddie Mac, the National Council of State Housing Agencies, the Habitat for Humanity International, the California Association of Realtors. So I work directly with businesses who are interested in either developing or improving their own platforms, their own technology, their own process for originating these loans and getting them sold to the correspondent lender or the state housing finance agencies.
Very good. Is there something I should have asked you today that I didn't ask you? Did we cover it okay, or did I miss anything?
There's only one thing that I would like to mention, and
Please.
that is that, and I mentioned this in the article, that we really need to applaud the Mortgage Bankers Association, the National Council of State Housing Agencies, Freddie Mac and Fannie Mae for the changes that they've made just in the last couple of years. If you go onto the National Council of State Housing Agency website, there is a spreadsheet called HFA1, and it has today about 25 to 30 HFA programs on there. You ask about how can you keep up with them? You could go to that spreadsheet and you can look at that at a certain state agency, and you'll see all the information you need to be able to determine whether or not you want to participate in their program. So that's a great tool. It's called HFA1, Affordable Homeownership Lender Toolkit. On the other side, Freddie Mac is working on a technology, a database called DPA1, where they offer information on down payment assistance programs that are available. And finally, Freddie Mac and Fannie Mae in the last year have introduced standard documents. So it used to be every agency had a different note and security instrument. Today, they're using standard docs, just like you do as an originating lender for first mortgage programs, which makes all the programs a lot easier. Again, more on the cap market side.
Very good. And Dottie, if somebody wants to reach out to you for more information, what's the best way to do that?
I'm available 805-630-5081. I answer my phone. And then we have a website which is being revamped right now. So I'll hold off on that actually. But my email is dsheppick, my name, dsheppick at dtspecialty.com. And I'm on LinkedIn, so you can see me there.
All right, very good. Dottie Sheppick, thanks so much for being here. And for our listeners, thanks so much. We appreciate it. And if you would do Dottie and I a quick favor, forward this episode to 3 of your favorite mortgage professional buddies, help get the word out, we would appreciate it. So on behalf of the Scotsman's Guide, my name is Carl White, and we'll see you on the next episode of Author Showcase. Thanks again, everybody. Bye-bye.